All right, so we got a green day today. Finally, we see the market pushing back up. Tesla came out with earnings. The stock is up there. And I'll show you some of the trades that I made today. All right, you can see I'm up $1,000 today. My net liquidation is $11,481. It's definitely not where I used to be, but it's good to see that I'm making some money, getting that account back up to where it used to be. That's the goal. Trying to get back to $16,000 by the end of this year to recover these losses. So we can see with the S&P 500, it closed $5,112.25, and I'm up $1,000 on that. And then Tesla, it was up about $2.56. We'll take a look at it here in a minute, and the stock is actually up much higher than that, but up $70 there. So today I closed all of my call positions that I had. I saw that the E-mini S&P 500 was going up this morning, so I decided to go ahead and close those for small losses just to get them off the table and not turn them into a problem. I also had an iron condor that I tried to roll instead of just closing the position for a loss. I went ahead and closed those today. So it was a put spread and a call spread. I rolled the put and I sold a call. I just closed that position just because the call was starting to lose money. I was making money on the put, so I just decided to go ahead and just close it for pretty well scratch, just to get it off the account, liquidate the position, and then move on. So you can see right now the E-mini S&P 500 positions that I have open right now from my 30-20-10 strategy. I actually have some puts that are out of the money now. It used to be that all of them were. We had a good day in the markets. We can see right now it's trading at 51.17, and so it's looking really good there. If the E-mini S&P 500 decides to continue to go up tomorrow, we could start seeing my positions that are about to expire go out of the money, which is exactly what I want. I want it to go out of the money, and then I can let it expire and actually get the full premium collected. So that's my hope. Not saying it's happening. This could just be a time where the market is adjusting for the massive sell-off that it had. We could continue to go down. There's no promises here, but it is looking good, at least in the short term, for these positions. So here on the E-mini S&P 500, we see the sharp decline the past couple weeks, and then this week we are seeing it come back. It broke the ADMA, even though it is reversed downward. We are seeing it push back up toward the 50-day moving average. So that's a good thing to see. We're seeing strength coming back in, and that's good to see, especially with the situation of my account right now. What I'm hoping for is to get my account back up closer to the amount that I started in the year, $16,000, so that way I don't have such a huge hole in my account. So I'm still doing damage control here. This is not my plan to make the 50% return by the end of this year. This was easily a mistake, a newbie mistake, and I am learning from it and managing these positions right now. So that's kind of the game plan I'm managing right now. I want to get out of these positions, collect what money I can, and ultimately move on. So Tesla, it had a green day today. It's still kind of looking like a doji, but when the earnings came out, the stock exploded. Let's take a look at the 5-minute chart to get some detail. So we see here that Tesla is now trading at nearly $163. That's the price that it was at before it started selling off massively before earnings came out. So that's really good to see. We are seeing some strength coming in here, and that's what I need to be able to close these positions, at least for a decent loss, not something that's going to totally destroy my account. So it's good to see this reversal here. It's good to see strength and confidence coming back into the market after Tesla came out with earnings. And hey, I don't believe the earnings was anything special. I think that it's like the Band-Aid is ripped off here, and everybody saw what they were expecting. They knew what they were expecting. They got it, and now they're comfortable to move on. So it's a good thing to see when I'm trying to at least get out of these positions for some decent losses instead of these massive losses that I was going to have to do. And I closed one of my Tesla put spreads the other day, which that's fine, right? The stock could have easily have gone down even further, and I didn't want to put myself in that position where the stock market is going even further down, and I have both my put spreads on. So it was reasonable for me to go ahead and close the position of one of my put spreads. It was past the 21 days to expiration, which is where I'd usually manage, and left this one on because it wasn't at 21 days to expiration, and I was wanting to see what was going to happen during earnings. Tesla looked oversold on the charts, and so I was looking for it to spring back closer to the moving averages after earnings. I just definitely didn't want to have both put spreads on going into earnings like that. So again, I'm going through damage control here. Before the S&P 500 started correcting, I was up like $19,500. and then it started crashing down and I was down to like $10,000 in my account. Now it's starting to come back up to around the $12,000 range, and I started the year with $16,000. It would be really good to see that come back up with the market coming in with the strength that it has, and then I can start again making money, but being very careful how I do that. And if you're interested in seeing what my plan is, check this video out right here. And I go over what my portfolio allotment's going to be and kind of my game plan for the rest of the year. And I'm a new options trader. My goal was to get a 50% return by the end of this year. Now I'm looking just to get my portfolio back to what I had at the beginning of this year. If you're interested in following me on this learning journey, hit the subscribe button. If this video was a help to you, hit the like button, and we will see you on the next video.